Obviously, there's a lot of things on the Fed's radar screen. And in fact, I would say it probably looks like the airspace over New York City. Um, the things that I can think about and that I spoke about earlier today from a securities operations standpoint, we've touched on it a little bit. Information security in all forms and fashions. The disclosure, unauthorized disclosure of customer information, I think is going to get an increasing amount of attention. And in fact, I think it's incumbent upon the industry to act quickly and maybe collectively to avoid potentially some harsh regulations coming down from Congress. Another thing on the radar screen, I think, is the increasing complexity of investment products. So you see a lot of our larger firms designing bespoke products for either for hedge funds or institutional investors, high net worth individuals. Those are great, and I'm not suggesting those are bad, but it does raise a lot of issues related to risk management. So one, we see those types of products being pushed down lower on the investment scale. So more individual investors are being marketed these products. So you think about things of suitability. Can the average investor understand the risk components of some of these complex products? And in fact, can some of the more astute investors understand the complexities of the products? These bespoke and one-off products raise a different set of issues when you think about trade execution and settlement. Very manual intensive. They typically don't fit into a straight-through processing type environment. So anytime you introduce manual intervention into a trade execution and settlement, you raise risk. And finally, valuation. You take a number of differing views on the valuation of these products. And in fact, if you're looking at a product that doesn't trade with any regularity, coming up with a fair value of that product could be particularly difficult. I think maybe one other thing that's really of interest these days is planning for influenza pandemic. We've just come out of a lot of activity in response to 9/11, where you say, you know what, maybe my backup site being across the street wasn't such a good idea, and I've moved it 50 or 75 miles away, or I've moved it to another state or a more remote location. That may be great from an event that happens at one central spot. From an influenza pandemic situation, what we hear is, people in both locations may be sick at the same time. So it doesn't matter that your primary site's in New York and your backup site is in California. It may hit both locations at the same time. Your plan may be to, if my primary site goes down, I put people on a bus, I put people on an airplane, I ship them out to my backup site, and they're ready to go the next day. There may be travel restrictions imposed, so that plan may not be able to go forth. Understanding what activities need an employee to be physically present at your facility versus being able to work remotely is going to come into play. A lot of trading activity, you don't need to be physically present. Now, that's a different set of issues of how do you have controls around the authorization for trading, how do you think about things like planning for recorded lines, etc. But trading in and of itself, you don't have to be physically present in one central spot. Settlement or any kind of other operations, you may have to be physically present, and understanding how you get employees to that site that are either sick and incapable of coming to work, or reluctant to come into a major city or a heavily populated area and get the work done is going to be important. And then finally, there's going to be changes in customer behavior. People may be less reluctant to carry cash because of the way it's passed from hand to hand. And so you may have a significant increase in electronic banking activity. Understanding your system capabilities and capacity is going to be equally as important. So those are two or three things. I'm not going to suggest that those are necessarily the biggest things on the radar screen, There's a lot of other moving parts. I mean, from a risk and risk management standpoint, the increasing influence of hedge funds, just in general. I think, understanding what risk is outside of the traditional banking industry and is essentially unregulated, and what impact that has for financial stability, I think will continue to get a lot of attention.